What's up, everyone? Welcome back to the Mortgage Heroes podcast. I'm Andy.
I'm Brian.
And this week, we're going to talk about rates. Rates are like the big topic of conversation at like the Federal Reserve level. Everyone in finance is talking about rates. And certain other people are talking about rates all the time. Rates got to go down. That's a terrible impersonation, but everyone knows what I'm talking about.
Yeah, we'll just get past that.
So, yeah, moving on.
Anyways.
Moving on. So, we're going to talk about rates. Brian, we need to talk about like the reality of the situation versus what people are hoping for, what we think might come next. Like, where's the right place to start with all that?
Yeah. So one of the answers I always get is, I'm waiting for rates to drop. I'm waiting for rates to drop. Oh, once rates drop, I'll get pre-approved. But my question back is, well, what are you doing in the meantime?
Okay. Wow.
Nah, but it's what I mean by that is that what are you doing if you're not already prepared, or if you already didn't take the measures to be able to know that you're going to get approved once the time comes, or once you're waiting for that, that time. I think, a lot of people expect for rates to drop and then, hey, I'm going to jump into the market. Let's go ahead and do it. But what people forget is that rates don't drop from one day to another, from one level to another level. They gradually drop throughout the course of the week, throughout the course of the month, and, time goes on. So with that being said, it's in your best interest if and you've been hearing, like I know everywhere all around the internet, TVs are saying rates are going to be dropping. The Fed's going to get, ready to make a move on rates, which although they don't control mortgage rates, let me make that clear, but their decision will influence the way that mortgage-backed securities, mortgage rates move. Yeah. So that being said, if that's happening and you want to get into the market, this is the perfect opportunity. And it's, it sounds so cliche to say this is the perfect time, or hey, it's the great time. I guess this is a good time for people that are serious about buying and that want to see what it looks like if you have a possibility of buying.
I understand the argument that people make. Like everyone always, the salespeople always say it's a great time to buy this or buy that. Now that's conditional though.
Yeah.
So when there's a lot of inventory, it's a great time to buy because you have choices, right? Mm-hmm. So it's the circumstances that change. When rates go low, well, it's a great time to buy because the cost of borrowing the money is cheaper than it was the day before. So you can say it that way. Or when prices are starting to go down or there's price corrections, that's a great time to buy too because you're getting the product cheaper than you would have if you were doing it 6 months prior. Yeah. So it is highly conditional. But I think it's really important what you're saying about the rates going in gradually. Yeah. It is not just like a light switch. There might be a day in the market where there's like a massive change, but that in the market has to make it to the bank side of things. The banks have to, let's say, what's the right way to explain it? They have to calibrate their rate sheet. Mm-hmm. So something can happen on Wall Street on Friday, but if it's at the end of the day, they may not be calibrating their rate sheet on that same Friday. It might not be till Monday when the market opens again that price change shows on the market rate sheet. So just be aware of that. And then the slow change is more evidence of an overarching changes in rate land and cost of financing land rather than just a one-time event where, we had this crazy black swan thing happened in the market and rates plummeted. So good thing to be aware of on that. It's more of a slow burn sometimes than a quick fix.
And you bring up a good point for people that are very rate sensitive, rate driven. This is for you. You should be testing the water, seeing what rates are looking like, starting to, gather information if you're looking to make a move in the market, because chances are that, like Andy said, you might enter the market one day where rates are, flat, but then that following day, if you're already pre-approved, you're going to be riding that, that breaking rates coming down, or you're going to be able to move quickly without rates moving when you have to lock.
So how does this change for people coming out of the summer if they didn't buy and they're looking into the fall and winter season? What's the right way to approach the expectation that rates are going to drop, or the evidence that they're slowing into and easing into a lower arena? What is now the new strategy for buyers moving forward?
So I think you need to be very wary that everyone else is also waiting for rates to drop. And although right now there may not be as much competition as we can expect once rates drop, you should keep that in mind, because as soon as rates drop, everyone else is also going to be, jumping on board and trying to buy a house, trying to snag a deal at a lower rate. So knowing that, if you're able to beat that curve and get in the market or begin the process of seeing what, getting pre-approved like, or start shopping for homes a little bit before rates start to drop. And, little spoiler, this upcoming week, the Fed's going to be speaking on the 16th. Therefore, we're going to see what that does to the market in the coming weeks. So this is the time to start getting pre-approved, sending in your documents so that you can then ride that wave once we see what direction the market's going to be going.
So is there a benefit for people that are out looking right now, like to just to wait or to strike while the iron's hot still? Like, how do you wager whether you're out there? It's the second week of September. Okay, am I buying a house now, or am I going to just wait till the first week of October? Like, what would you say to somebody?
So for people that are already in the market right now, if you're able to snag something in right now, something that fits all your boxes, it's a need, not a want, then you should pull the trigger in it right now, because chances are that if you're looking at that house and let's say there's only 2-3 people that are interested, one straight drop, there's going to be 10, 15,
fair point.
A lot more people.
No, that makes a lot of sense. Yeah, especially if you find a place that I'm going to say in love with, because if you actually are just looking because you want to look and you're in love, okay, well, go buy the place. If it's a condition to something else in your life and you're like, I have to move, well, then you also kind of maybe need to strike on that.
And that's one of the things that I tell a lot of the agents that I work with. Well, like, hey, look, if they really want the property and they have the means to do it, I know that they can. It's really up to them if they want to take that step up and take, that payment or, invest in that property. Because once you really want something and you're committed to getting it, the price doesn't really matter. And you'll adjust in a certain way, at least for certain people that have that approval. Maybe they have a set goal, but they're like, this house really has everything we need and then a little bit more. Maybe we could stretch out our approval a little bit longer.
Well, and what you're alluding to though is price and cost.
Yeah.
So the price is the price you're paying for the house, but the cost of borrowing the money is going to vary based on a lot of different other variables. If you're negotiating on the price and you get the price you want, well, then the cost long term is going to look a lot different over the duration of keeping the place if you're refinancing into a lower environment down the road. If it's a matter of getting the place right now, get the place at the price you can afford to pay and then address the cost as you have to in the future to reduce it. But if you can pay for it now and you're qualified now, get it now while it's on the table, and then you can make those adjustments down the road.
And what we've been seeing a lot from the active buyers that we've been working with, the buyers that have just recently closed on their properties, is sellers are willing to play ball. They're willing to give you concessions. They're willing to pay for certain credits. They're willing to want to give you money so you could buy their property. Why? Because they know that they need a sell. It's either been sitting on the market, which I've been seeing a lot of properties sit on the market for a lot longer, from 21 days being a long to now 40 plus to even 100 in some cases, depending on the property
and the location,
location. So
and the type of property, like condos and townhomes right now, they're on the market a long time.
Yeah,
and then I'll say
you bring up a good point.
Also, locations that are on the perimeter of the metropolitan part of San Diego. So the Alpines, the Ramonas, the Hamul, Descanso, Campo, Dulzura, they're on the market a lot longer than Chula Vista, Bonita.
Definitely.
You
bring up a condo. So one thing that I've been noticing about condos is that, there's a lot more condos than there is single family houses, but with, the prices being where they're at and then having a slap on of $350 to maybe even $500 in HOA really kills the deal when the HOA really isn't giving you your bang for your buck and you see what you're getting and it's not worth it. A lot of people that bought in HOAs months before are right now like, hey, I need to sell, or hey, I just don't want to deal with my HOA. So that's also been an issue that I've been seeing with people going into these condos, HOAs. They really want to, hey, I don't really want to mess with them because they're very strict. Half of the time they don't have all their, financials in line. So that kind of messes with the financing. So you really, really have to do your homework before going and seeing a property. Like a condo, to know that if it's approved or not, because if not, it could change a lot.
Approved for VA, approved for FHA, that kind of thing. Yeah,
exactly.
By the way, side note, if you are at a condo complex that does not have the elements ready to get qualified for VA or FHA, that's not just a problem for you, it's a problem for everybody.
Yeah.
So they're eventually going to have to cross the threshold of fixing that problem.
On the flip side, even for people looking to refinance, a few years back, we ran into an issue when a client was trying to cash out refinance, but their own property management company in HOA didn't have their financials in line. So we had to do a lot of work to be able to get everything, in line for them to be able to refinance. But it's like, well, if we didn't do this, everybody's kind of messed up.
So I overheard Memo the other day talking to someone about their builder, and you're talking about like concessions from sellers and that kind of thing right now, because the concessions can be used for a 2-1 buy down, closing costs, all that kind of stuff. Last week we talked about a buyer of yours who got closing cost concession where he forward paid off a credit card and then recuperated that money on the back end with the seller concessions. So that's a cool deal.
Yeah.
Talk about builders real quick. So what's the way people should play it if they're at a new construction place? What's the right attack angle in your opinion?
I'm glad you brought that up. So we recently got a offer accepted for a new build, and the new build is offering $5,000 in incentive credits. So what I would say is, if you're looking to buy a new build, I would say ask for what you want, because the builder has the ability to make you a good deal. Unfortunately, if you're working with a broker, they're not going to be able to compete with the credits that a builder will give you. But what I will say is be wary of, the type of rates that they give you, the way that they're giving you the credits, because they could be bumping up your rate to give you, all those credits.
To create the credit opportunity means they have to sell you a higher rate.
Yes. So be wary of that. But if you're looking into new construction, right now you're going to have a great opportunity of getting a really good deal, getting either, certain stuff already paid for, or getting a lot of credits to be able to, pay for all your closing costs, bring your rate down. We've seen it in the past where they help pay closing costs, debt, and also help bring the rate down. So they have the pockets, they have the means, and they can move inventory if needed.
Yeah, and they're going to have their own each company or each developer is going to have their own incentives for why they need to sell or wait, based on price, based on market, how exposed and at risk they are as a company. Maybe the neighborhood you're walking into isn't the only one they have in the area that they're developing right now. They made it. It's kind of like, think of it like car lots. Like you can see I'm not going to use any of the household names in San Diego, but there's like some specific long time families who've had certain car lots here in San Diego, and
Toyota Escondido.
Well, I guess we are saying it then. So yeah, there's Escondido, and there's Chula Vista, and there's El Cajon, and then there's all these, right? Yes, Mossy. Yeah. Okay. So that's my point though, is that they might have different incentives in this neighborhood versus the other one, because their company has certain pressures, or they're at a certain level of risk as well. Just remember that when you're going in and asking for what you want, they're making their own calculations on their side too, because they're going to need to move that product.
Yeah, and another thing that probably isn't a popular comment that gets told is do a home inspection on the new builds. Just because it's a new build doesn't mean it's up to par and everything's correct. We've seen recently a lot of corners being cut, a lot of work not being done to the level that it needs to do for these types of properties, and all that goes to being able to negotiate better terms for yourself, and just equipping yourself with the right information to put yourself in the position to win. Yeah.
No, that's good. So if you're a buyer right now, these are the conversations that I hear you guys having. I can overhear you. I can overhear you guys. You talk loud enough.
Thank you.
So, I hear about the 2-1 buy down, rolling the dice on whether you do the 2-1 buy down now, or just like risk it and hope that the market goes in your favor by waiting. There's risk in that. Taking the property today versus hoping the property's still available tomorrow. There's risk in that. I would say that right now, if you have the pick of the litter and you can choose new build versus existing, make the choice that suits your finances and your family together, that you can see yourself in for a while. Because if you do get a price that is appetizing and the potential for it to cost you less in 6, 12, or 18 months is on the horizon, then that's a good situation getting gooder for you, not a bad situation getting worse.
Just to give a little bit more insight. So typically, at least here in California, San Diego, where I've seen it the most, if you're looking to buy into a new community, a new build community, it's very probable that there's going to be special assessments on property taxes, and you're going to have an HOA. That alone could be, anywhere between, an extra $1,000 I've seen on your monthly payment. Your
monthly cost.
So don't get misguided by the purchase price. Ask special assessments and HOA, because that can bump up your payment. That can definitely take you out of your budget. And although the price might be good, purchase price I've seen, they start off fairly low. The HOAs and special assessments will boost your payment right back up.
Yeah. Well, let's pivot and talk about people who already own a home, though, and let's talk about refinance opportunities with the rate environment that's coming up. Just in the last couple of days, the market has softened, is our way of saying rates have eased their way down. So I think they're already kind of heading. It's like a slow descent when you're landing at your destination in a plane. You're like at 30,000 feet, then it's 28, then it's 25, then it's 20,000 feet. We're already starting that slow descent in rate land. So what are you seeing as opportunities for people who are homeowners right now, Brian?
Yeah, so I've been getting a lot of calls lately and saying, hey, what do I need to do to bring my rate down? I bought back, in 2024 and 2023. And what I am seeing is a lot of people are ready to refinance because they've had the rate a little bit higher than they wanted for quite some time now. Everybody thought maybe it was just a slow, a quick fix, a soft landing, if you will. But, it extended over longer periods of time. And I feel right now, if you're looking to, save some money on your property, on your mortgage, it's time to really gather all your documents, calculate all your, expenses, calculate all your debt, debts and really see where you stand financially, because a lot of people that we've helped just recently have utilized their equity in a smart way to remove debt from them, from their credit reports, from their credit, and, put it back into the house, allowing them to save thousands of dollars.
It's not just from their credit, it's from their monthly budget. You're talking about a $600 car payment or whatever, and oh, that's crazy, you shouldn't do that. Well, if your $600 car payment is killing you, you're gonna have to either sell that car or pay that car off or somehow and make a decision. And one of the ways I want to encourage people right now, so I'm jumping in the middle because I know this is going to happen. If you had a 2-1 buy down or a 3-2-1 buy down in 2023 or 2024, that rate has time-bound increase connected to it, that if the market's going to soften and meet you where your still temporary rate is at, that is a ideal situation. So if you're watching this and you own a house you bought in 2023 when the 2-1 buy down was all the rage, or in 2024, this could be the fall and winter of 2025. This could be the window where you can actually secure a fixed rate that might be really close to the one you have under the terms of the 2-1 when you initially got it. Does that make sense?
That makes perfect sense.
Yeah, this would be a great scenario when you can do that, roll up that car payment, roll up all that debt or whatever you had. And then look, don't be embarrassed by it. We talk to people all the time. They overspent, right? Maybe they got some behaviors they just got to rein in a little bit. I'm not going to disparage anybody for that. It's just something that happens. I found myself in situations where I had to do that in certain aspects of my life, and then I had to course correct it and fix it. Okay. And the house is there to help do that for you. So this is where I think you have the window to consider those things. And if the math is in your favor, do it. If the math isn't in your favor or you don't get a benefit for it, don't do it. It's as simple as that.
The best part is that you can do the math and see if it works out for you and it doesn't, and you're not tied down to anything, but it'll give you clarity, understanding, and a clear picture of what you need to do. On the flip side of this, though, for other homeowners that I've been also speaking to, a lot of people are also, eager to refinance, to take equity out to put back into their properties. Oh man, I get at least 3 calls a week, saying, hey, how do I take money from this property? Hey, I'm looking to build an ADU in my backyard. Hey, how do I add square footage to my property? So there's a lot of that as well. And I feel that with the rates being so high, the cash out refinance wasn't as, as attractive as it could be once rates start to come down. The reason why I say that is because a lot of people think that they can go and get a HELOC and say, hey, I'll pull out the equity, I'm good, I have a lot of equity. But what they forget about the HELOC is that it's tied to your debt to income ratio, and therefore we have to take into account your mortgage payment and all your other debts, and then on top of that, that new HELOC payment. And what we've seen is that the debt to income ratios aren't able to support that, therefore they aren't able to take the HELOC. Even if they needed to or wanted to, they are already too maxed out in their debt to income ratio. So when you do a cash out refinance, you don't take your monthly mortgage payment into consideration. You really only take your debts that are being reported. Therefore, you're able to actually take out more because your mortgage payment isn't being technically factored into your debt to income ratio.
So then this same season of window I'm talking about, the 2-1, this also might be if you already have a HELOC that's already the balance is already hit. Like let's say you took 50 grand out a year or two ago, or 100 grand, and now it's maxed out, and you need to stop making a first mortgage payment and a second mortgage payment. This might be the time where you have to reconsolidate those two into just one loan and one payment again. Yeah. So that might be something to do. The other thing I was thinking about too is people who have mortgage insurance, whether it was mortgage insurance on a conventional loan or mortgage insurance on FHA. If the equity meets the standard and you can afford the new proposed payment under the lower interest rate, then you should consider that. Yeah. That's not going away until you do that or you sell. Yeah. So this would be something that maybe it's not exactly today whenever you're watching this, but maybe you need to prepare yourself for that conversation. So if you find that choice is maybe 1 or 2 steps down the road from where you find yourself, okay, identify the location now and then what steps you need to be able to do that.
And I think that's where we're at in this current period of time, where you need to start making those assumptions. You need to start kind of putting all your war chest together so that once rates do drop, you're not, trying to do everything as rates are already dropped and people are already flooding the market, and you don't really get, the benefit of what you could have gotten if you were prepared. So my biggest thing from this goes back to what we've been saying, be prepared. And I think that's what just stands out from everything this year, from, the buyers that I've worked with, from the clients that succeeded, is that they've been prepared, and they've been prepared not just the moment that they wanted to buy, but for months out. And it's a process. Before, it used to be a little bit more swift, where you can maybe in 2 months start, get into a house and close. Now it's a little bit of a longer process. So you want to give yourself some runway to really get into the market, see what it's looking like, know what offers look like when you send them out, see what kind of negotiations are out there. Because once you have enough, experience as a buyer, I've seen that they get more savvy as well, and they start understanding how to submit offers. So I think that's very important as a buyer to understand how you can submit an offer that's going to help you get what you want.
So last thought for me is another opportunity for the current homeowner is the VA IRRRL or the FHA streamline.
Yes.
So I want to talk real quickly because if you did buy a house in 23 or 24, yes, even though FHA and VA rates are typically lower than conventional financing rates and especially high balance rates, this could be a window too where you can walk into that streamlined process and save yourself some money. There are some safeguards in place, so that way, like, you're required to actually make monthly savings. But if you do have an FHA loan or a VA loan that you acquired in 2023 or 2024, you are entering a window where you could potentially have some monthly savings because of the way the market's moving in your favor. So just keep that in mind.
Yeah, we actually have some clients that we just spoke about this. They're looking to buy a property, and they're a little bit not skeptical, but they're they want to have a little bit more confidence in that monthly payment. So we advise them, hey, don't pay any extra money if you're going to want to save some on your rate, because in 6 to 8 months you'll be able to refinance down. So right now, look at it like a temporary band-aid. If you're able to get in for 6 to 8 months, weather the storm, you're going to be able to get a break in at the end of those 6 to 8 months or 210 days after your first payment.
Nice. So what else do you want to cover as far as like this topic of rates kind of coming into a more favorable, situation for people on the buyer side and also on the homeowner side that maybe they can refinance? What else do you need to share that people should be aware of that you're hearing, you're seeing, that would indicate to them that they're primed to take their next right step?
I'd say if you want to refinance, start today. If you're looking to buy, start aligning yourself with people that can give you information in the way you'll understand it, because I think that's the most important part in all this, actually receiving the information that you understand that allows you to have the confidence to then go and say, hey, I want to get pre-approved. Hey, I want to start shopping. So it's not really like there's nothing really you can do right now to make it better besides actually taking those steps and getting yourself prepared. So I can't say, hey, there's a magic pill, there's these steps. You just have to take that action and say, hey, I need to sit down with somebody that could read me, my financials, let me know where I'm approved for. And I had a perfect example, actually, now that you bring it. Someone on social media reached out to me and said, hey, we're looking to buy a property. We want to invest in a home because we've been renting for, quite a long time. And we just feel we're not getting, the benefits that we should. And they're like, we don't know where to start. We don't know anything about the process. When could we sit down and go over the process? That's where it starts, Andy. Just simply starting. Yeah. How do I don't know. I don't know anything. And it starts by doing that. And you'll come to realize that the information is there. There's a lot of people that are willing to help. And if you don't feel comfortable with the first person you talk to, you're not bound to them at all. So make sure you talk to somebody that you're comfortable with, that you trust, and that you really feel that they're giving you, their honest truth.
Yeah. Have your questions ready. Yeah. Ask what you need to ask.
ChatGPT is a great tool.
As silly as it might feel to ask the question, because on the other side of those answers is the pathway to you having a road to success in mortgage and real estate.
And when working with clients and couples and people that just, have questions ready, it's a little bit more constructive in how we're able to help them because they have an idea of what needs to be done. And when they have that idea, they're more receptive to the answers that we're giving them because they want to learn. And I think that's what helps a lot in the process. You wanting to understand, you don't have to be the expert, but just have an idea of what you're reading, what you're doing, because ultimately you're the one that's taking this big purchase and this big risk. So you better, have a good idea of what it entails of.
Yeah. And if there's someone around you right now, whether it's at your workplace, in your family, or your social circle with your friends that's talking about buying a home, or they've been talking about needing to refinance, or they're expressing their concern about the mounting debt that they have, and they're privately sharing this is a great format for you to, or a great thing to share with them, because we talk about it in this format where you can kind of innocently share with them some of the ideas and the concepts we've discussed here and even on other shows. And it can be an entryway for them to actually get the help that they need in the market. There are plenty of solutions in the market, of course, and we'd love to be selected and chosen. But if you are close to somebody who they trust you to share what's best for them, and this can be a solution, please share this episode with them. Reach out to Brian, reach out to myself, reach out to Will, and we'll come up with whatever the best case scenario and solution is for the people that you know, love, and trust. So
that's what we're here for.
I think we're going to be in a really interesting fall and winter.
Yeah.
This is kind of like we're kicking the football off. Oh, it's football season just started.
Go Eagles.
Literally in a new season. So we're literally in a new season, but of finance. And I think that we're about to embark on a run of buying and refinancing, not because my sentiment says so, but all of the things I look at in the market, they're going to lead towards that, I think are starting to fire off. And so I want to be here for that and help you guys all win in mortgage and real estate too. So
yeah, I know that's the cycle is definitely changing, and it's time to get out there.
Yeah, thanks, Brian.
Yeah, of course.
Well, I appreciate you being ready for today's show. Thank you all for watching. If this is your first time here, remember to subscribe to the channel, like this video, share it with somebody, turn on notifications so that every time we drop a new episode, you hear about it first. And then also remember to check out our playlist called Friends of Mortgage Heroes. Myself, Brian, and Will interview our friends in and around real estate about the cool things that they're doing, the ways they're winning in mortgage and real estate, and also, in some cases, the service that they offer inside real estate and the things that we don't get to see firsthand all the time. It's been a wonderful experience of letting them come and share their story as well. So be sure to check that out. Brian, thanks for a great show this week. Thank you all for watching, and we'll see you again with another great episode next week. Later.
So if you enjoyed this video and got value from it, subscribe right here. And if you want to watch another video, click right here.